Or Brian Sozzi got a chance to speak with Cisco CEO Chuck Robbins on the state of tech and the ongoing effects of supply chain constraints. They talked, of course, in Davos, Switzerland at the World Economic Forum.
Well, I mean, clearly there's a lot of issues in the world right now, and everybody wants to get declarations from every attendee here about whether there's going to be a recession or when does inflation end, or all of these kinds of things. And I think that, look, I don't want to see us talk ourselves into a recession, first of all. And I also think people are a little too pessimistic. I mean, if you think back over the last several years, the challenges that we've all dealt with as a global society, we should have confidence that we're going to deal with whatever comes our way. And I thought that Carmine was right. Whatever happens likely is short-lived. But if we look back on the success we've had over the last few years in a very complicated world, it should give people hope as we look to the future.
Yeah, every conversation that I had has had this layer of gloom. This is not the same type of Davos I'm used to. Usually there's a lot of optimism here. But what ultimately, I mean, do you think we're talking ourselves into recession? Are we at that point?
Well, first of all, you can take solace in the fact that in March of 2020, when we were here, we were all super optimistic, and then we went into a 2-year pandemic. Mm-hmm. So we're never right. Okay. So I think the consumer clearly will make their own decisions about spending. But I think at a business level, if we all walk around here talking to each other and we're all talking recession, as CEOs, we actually define capital spending and OPEX spending in our organization. Mm-hmm. So if we go back and say, we think there's going to be a recession, so slow down spending, then that will ultimately could lead to it. So I just think we got to be cautious about it and just take it, a day at a time and see how things go.
I had a bunch of other questions planned for you, but I got a chance to sit in on your panel today at the World Economic Forum. It was very interesting. And my question now is, are you getting enough help from governments to get done what you need to get done and drive digital transformation?
That's a really good question. I think the intent is there. I think, government is bureaucracy, unfortunately, and so it just takes longer. I mean, I think I've had lots of discussions in Washington about the need for public-private partnerships. We really need to be coming together quickly to solve some of these supply chain issues, and it's going to take both to really, if you want to get it done quickly. Talking about investing in technologies that are 6, 7, 8 years out. We should be thinking about how we do that to for the U.S. to remain competitive for sure, but even on a global basis. And I think the technology is moving so quickly right now. I think that it's incumbent upon companies to very honestly engage with government to help them understand how they should be thinking about the regulatory requirements, because we live it every day and it's complicated. And I feel really bad for these regulators who are trying to regulate technology that's so complicated, that's moving so fast. So I think we just need more and more interaction. I spend so much of my time with government today.
Do you think they realize, though, that you have to charge a fair price for what you do?
Yeah, I've never had any pushback on our pricing model, but that generally is focused on protecting the consumer more so than it is. We're B2B, so it doesn't come into play as much here.
Good to hear. Supply chain challenges. You're coming off your most recent quarter here. Is there an end in sight? When will more products be on the shelves?
I think there is a beginning of a recovery in sight, I think. So here's what I would tell you is we got to get through the China lockdown.
Mm-hmm. Is that Shanghai?
Last I saw last week, there were like 40-plus cities in lockdown over there, a quarter of the population. So but Shanghai is the most obvious. And we have components that go into other components that go into our products that are coming out of Shanghai. So that's been one of our big challenges, which led to the earnings results. I think most technology companies over the last 9 to 12 months have been taking on redesign issues. So we've been redesigning products where we have serious component issues, replacing them with other components where we can get those. That stuff for us is going to start showing up in August, September. And I also think some of the non-semiconductor problems in the marketplace, I think the second half of the year, we should start to see that ease a little. And then hopefully semiconductor capacity starts to increase as we get into 2023. And if we do see a little demand weakening, then that certainly helps get supply-demand back in check a little sooner.
Any easing in inflation?
Not that we've seen as of now.
What parts of your business do you see it hitting you the most?
Just on the component side. I mean, all of our input costs for our products, the semiconductor components industry is a very tight-knit group, and the demand is so overwhelming that they have just complete pricing power. And so, they're doing what They do, and they're taking advantage of the demand to actually increase their revenues, and it's getting passed through.
Last one for you. There's very few executives I've talked to here that have your experience, that have seen a lot of different tech cycles. Explain for the average investor out there what is happening in the markets with tech stocks.
I think you just called me old. Thank you, Brian.
You said that. I didn't say that.
Walking around Davos, I told my team, I said, I am officially a senior citizen here. I've been here so many times. Look, I think valuations were, you could argue that they were extreme. I mean, in many cases, relative to how the market has historically been priced. And so we were talking earlier about a lot of the smaller technology companies, whether public or private, a lot of them are run by young entrepreneurs who have never seen a downturn. So they're struggling now with, was that high price my valuation, or is this low price my valuation? And they don't really know. And if you look in the private markets right now, late stage private companies are, in general, are cutting back their valuations from the last raise, which is, it's hard for them to deal with. But I just think it's a correction, and look, it's going to ultimately create a buying opportunity for lots of people, and I think you just got to decide when that's right for you.
Did EY's CEO Carmine DeCipio give that advice?
Carmine actually told me that. In fact, he gave me a list of 10 stocks that we should be buying right now. Maybe we can publish them on the website for Carmine's picks.
We'll plaster it all over the Yahoo Finance homepage.
Or we'll set up a WebEx and Carmine can present them over that.
Duly noted.
All right, that was Chuck Robbins with our Brian Sozzi. Coming up.